What's up, everybody? I'm Leaf with Adaptable Wealth, and today we're going to do another viewer request show. These are shows where I review stocks that are requested by subscribers of my channel. So, if you're interested in any companies, please subscribe to the channel and then leave your request in the comments section below. Now, I can't promise that I'll get to every single company that you all request, but I will do my best to get to as many as possible. Today, we're going to cover Crowdstrike, the young cybersecurity firm that's taken the cybersecurity market by storm. Crowdstrike was requested by Yao-M1S and Atbial. I hope I'm pronouncing those correctly. Apologies if I'm not. In the name of transparency, I do not currently own this company. Now, let's get to Crowdstrike. Crowdstrike is the cloud-based cybersecurity firm who has been kicking ass and taking names in the cybersecurity market. They've grown revenues from $60 million in 2017 all the way to $3 billion in 2024. That's a 78% compound annual growth rate over the past 7 years, and investors have taken notice. The stock is up fivefold since its IPO in 2019, and they currently hold the leading market share at around 20% in the endpoint security market. The premise of cloud-based endpoint security is that you no longer have to build out a huge, heavy, hardware-based, expensive security network to protect the devices that access your network. Instead, you can protect each device directly in a distributed manner, whether people are working from home, at an airport, a local coffee shop, wherever. And it can all be done via a lightweight cloud-based application. Crowdstrike employs a land and expand strategy, with the goal being to get you in the door with a great product and easy, low-cost setup. Customers have their choice of any number of modules, which range from threat intelligence and an antivirus to identity security, threat hunting, and vulnerability management. This is incredibly valuable to any business, but particularly small and medium-sized companies, because you don't have any large upfront investments to get high-quality protection for all the devices on your network. It allows companies to build as they grow. As customers add more and more modules into their subscriptions, Crowdstrike's platform comprises a larger portion of their IT security ecosystem, creating what is called switching costs. These are costs and risks incurred by the customer if they were to switch to one of Crowdstrike's competitors. First and foremost, Crowdstrike offers a superior product for endpoint security. Switching to a competitor would mean moving to an inferior product, which is a cost in and of itself. Then there is the fact that it's a lot of work and time to first find another security provider, but then to deploy their security platform across an organization. It temporarily increases the risk of a lapse of security coverage during the transition to a new provider. And finally, their IT team will have to put in additional work to absorb the new platform across the organization, which includes the potential for retraining of the IT staff. All of these can result in operational disruption and other costs and risks that most companies are not willing to take in order to switch security providers. Based on Crowdstrike's historical retention rates above 95%, most companies cannot justify it. But Crowdstrike's competitive advantage doesn't stop there. They benefit from a network effect as well. As Crowdstrike's platform is deployed on each endpoint device, it is collecting an immense amount of real-time data that is then passed through their machine learning models to improve the threat detection capabilities of the platform. A more effective product attracts new customers and holds existing customers in, which then allows them to collect even more data, which is used to make the platform even more effective, and the feedback loop continues, making the platform stronger and more valuable over time. As one of the fastest growing companies in the cybersecurity space, Crowdstrike has delivered top-line growth of 50% per year over the past 10 years. Even better, 90% of their revenues are high-value, sticky, recurring subscription revenue. They also generate an outstanding 30% free cash flow margin. The main problem that I see with Crowdstrike is that they've let their expenses get out of control. Revenues have doubled over the past 2 years, but they've allowed expenses to double as well. The primary culprits are their headcount and stock-based compensation. Headcount has tripled over the past 5 years, resulting in their employee-related expenses skyrocketing and continuously eating up their operational profits. And then there is this. Stock-based comp is out of control, consuming 2/3 of their free cash flow each year. Remember when I told you that their free cash flow margin is great at 30%? Well, when you factor in their stock-based compensation, their free cash flow margin drops to 10%, which is quite poor, especially for a software company. At the moment, I'm not too worried about it, because we see this with pretty much every young tech company. Eventually, the successful companies get to a point where they no longer have to add as many people or advertise as much or spend as much on research and development for each additional dollar of revenue. That is the point where their profits and cash flows take off, and I fully expect Crowdstrike to get to this point over the next 3 to 5 years. But if in 3 to 5 years they still haven't hit that point, then I'll be concerned. They were profitable over the prior 6 quarters until the most recent quarter, where they reported a $17 million loss, primarily as a result of the IT outage that they caused this summer. They should be back to profitable in the next quarter and going forward, unless we see a delayed impact of customers leaving as a result of the IT outage. And I believe that Delta Airlines, Microsoft, and I'm sure many others are suing CrowdStrike because of it. Return on capital, operating margins, and net margins have been positive more often than not over the past 7 quarters. It would have been profitable in each of the last 7 quarters had it not been for the software outage this summer, which significantly increased their operating expenses, resulting in a loss. This is definitely a promising trend for a small company. They're in a net cash position, and I really like how their debt has remained steady while their cash has grown over the past few years. They don't pay a dividend, and shares outstanding is growing rapidly at 2 to 4% per year, which is a bit faster than I'd like, but it's not out of the ordinary for a company growing this rapidly. Any money they generate, and then some, is being plowed back into the business. The biggest drawback with this company is their valuation. You're paying a laughable 672 times their last 12 months earnings, but because they're expected to grow so fast, that drops down to a still insane 93 times expected future earnings. That's 22 times sales and practically a 0% free cash flow yield. Nvidia isn't even trading at these levels, and both Morningstar and CFRA find CrowdStrike to be overvalued, with Morningstar placing a $300 fair value on the company, while CFRA is much lower at $215 per share. As we do with any investments around here, it's time to dive into the risks of an investment into CrowdStrike. Their primary risk is a direct result of the competitive dynamics of the cybersecurity industry, which is characterized by intense competition and rapid, relentless disruption. They compete with very strong and experienced companies like Palo Alto Networks and Fortinet, and increasingly cloud providers such as Amazon, Google, and Microsoft. And if they don't keep on the forefront of what is possible in the cybersecurity market, then they could watch their competitive advantages break down over time. But it's not enough just to keep up with the most recent technology. They have to execute nearly perfectly at the same time. I've already mentioned the global IT outage that CrowdStrike caused with one of their updates earlier this summer. If something like this happens again, it's my opinion that CrowdStrike would suffer immensely. When I first started researching CrowdStrike for this video, I thought I would reject it based on its valuation and the fact that I really like one of its direct competitors, Fortinet. While I still do really like Fortinet, I have it on my watch list after all, and if you didn't see this video I just did on Fortinet, I encourage you to check it out so you can get a comparison between these two companies and decide for yourself which one is the better investment. But I didn't fully comprehend how disruptive CrowdStrike's technology and business model is. While I'd be shocked if they ever got anywhere close to Fortinet when it comes to the comprehensive security solutions, the decentralized approach of endpoint security and the rich targeted data that it provides, the relative ease of quickly signing up and deploying their cloud-based platform with no huge expensive hardware required, and the fact that the customers can build out as they grow so there is no huge upfront costs, is exactly where the world seems to be going with increasing cloud adoption, autonomous vehicles, Internet of Things, work from wherever, and so on. I think CrowdStrike is a great addition to a diversified portfolio as one of the high-risk, high-reward equity investments, and I've added it to my watch list. You must understand, however, that you will have to deal with significant volatility, and you could lose a significant amount of your investment with this company. I personally am going to sit tight and wait for a better price. After all, I have many other options when it comes to high-growth tech stocks such as Nvidia, Arista Networks, Netflix, and even Fortinet that are cheaper at the moment, and most importantly, have stronger competitive advantages than CrowdStrike and are therefore more predictable investments. But I'll be ready to establish an initial position if CrowdStrike drops below $300, provided the fundamentals have not changed for the worse at that time. Well, that'll do it. I'd love to hear your thoughts on CrowdStrike. Do you agree or disagree? Are you buying CrowdStrike here? If so, please leave it in the comments. Also, please make sure you like this video and subscribe to my channel so you don't miss any videos when I release them. It's a quick and free way you can help me grow this channel if you find this content valuable. Lastly, if you're interested in other high-quality tech companies that could be good buys right now, click on one of the thumbnails that you see on your screen. Until next time, you all take care. I'll see you in the next one.